equity markets today. Obviously, that GDP number is key out of the US, 5.7%, way above expectations.
Yep.
Setting the tone for next week.
It's a very important number that we've had a bit of negative news, you know, all the political stuff about the President clamping down, President Obama clamping down on banks. So there's been quite a bit of negative news, the whole Greece story. You know, there's a new acronym in investments now called PIGS. Yes. Okay, you know about PIGS, which is a new one.
Portugal, Ireland, Greece, Spain, and I think it can be piggies because you can add the Italy.
Italy onto it, yeah. Okay. But anyway, this is incredibly good news. That you've got a very, very strong economic recovery, 5.7% annualized, which is the highest since 2003. So this is a clear and definitive data that the world, led by the US, is finished with the recession. How long this lasts is an endless debate, but we don't have to worry about that now. It's probably in place for at least a year or a year and a half, and under that environment, a couple of things are going to happen. We're going to remove the uncertainty about commodity prices going up. Commodity prices are going up. The dollar will strengthen. The dollar always strengthens in the start of US economic recovery. Even while interest rates are low, you're going to get a strong dollar. However, when you talk about the rand dollar might not be as weak as what you anticipate, simply because if there's an economic recovery and commodity prices are going up, it's good for the South African rand. People are going to come and invest in South Africa. So the most important news the whole week was this US GDP number. Of course, our trade data also came out, which was very positive. We went from a surplus, a deficit in November to a surplus in December. I don't know how the market is actually going to close, but it was down about 0.7% when I left the office, which was way better than what anyone thought would happen today.
We're going to check on those market numbers in just a moment. It is 7 minutes past 5 o'clock. We need to have a look at the impact that US data flow has had on the local market. Are you as excited as Wayne McCurrie about the US GDP data and the trade data on the local front?
I think those were very, very positive indicators, just in terms of the fact that we've had a lot of negativity around the market over the last 10 trading days. And so it's a sigh of relief. I think that we are still in the position where risk is going to come back on again. People are going to start questioning quality. But more importantly, I think Wayne hit the nail on the head that rand, I don't think necessarily is going to weaken to the levels that a lot of people think that it may just do.